just so you know, these are all Clearco people.
What's up, guys? How you doing?
And Praneet just showed up.
Yeah.
Praneet.
What's up, Praneet? Yeah.
So a lot of the team here are GTM team. So BDRs, AEs, but we also have members of our credit and risk team and finance team. So it's a good cross section of the company. So you guys, this is Chris from Venn, and he's going to introduce himself, and then we're just going to have a nice conversation, and I'm going to ask him a bunch of questions that I'm sure you'll all find interesting.
Yeah, absolutely. Thanks for having me, guys. It's great to be here.
Welcome.
You guys have been tremendous partners to multiple of our companies. So I was really jacked when Sam and AC asked me to come in today. So I appreciate all the work you guys do. You play such an important part in the ecosystem. So I run a firm. We invest in high growth consumer retail brands. If you look us up online, we started our business in the middle of COVID. It was actually crazy. Can I sidebar and just tell this share? Is this cool? And sorry, I curse a lot. I got put in boarding school at age 10 and it's been a fucking disaster ever since. So if anyone's offended, there's not much I can do. I'll do my best. My mother would be just ashamed. So we started our firm with this idea that there was a need for more growth equity in North America. And I had some partners who were really good at healthcare and education investing. Some of us were consumer retail. My background, I spent most of my career at McKinsey & Company. I was one of the leaders of the global retail operations team there. And we just had this idea that, we were going to provide more growth equity to high growth consumer retail, healthcare and education brands. We signed up our first deal February the 10th of 2020. I quit my job. I was on the exec team of Hudson's Bay. I'm just a passionate lover of Canadian brands. But I quit my job. We were going to start this. The idea was we're going to, do a couple of small deals, friends and family, and then we're going to go raise a blind pool of capital. So we signed up this business out of the US, off strategy for us now. And we signed up Feb 10th. I gave my notice. I did a final biz dev trip to London for HBC. And we were over there meeting with a bunch of the world's largest retailers. And I started to get some noise in the middle of this transaction, being like, is COVID real? Is it going to disrupt the business, all the rest of it? And we're like, no, it's like SARS or like bird flu. Like they're going to, prevent it. It's not, this stuff never happens.
It's all good.
Everybody freaks out and like somebody does something and we're okay. And then it got more and more real. So I was asking some of the large retailers over there, I'm like, what's happening with your guys' private label manufacturing? And they were like, oh, it's a disaster. Like COVID's super real. I was like, fuck. So came back, said to my partner, and we got together. I think it was like Saturday. It was like March 7th, 8th, 5th, somewhere in there before the world shut down on March the 12th. And you remember how quickly things were changing those days. So we got together. It was like White Plains, New York went into lockdown on like the Saturday. And so we're like, oh shit, like our major US city is going to shut down because of COVID. And then there's going to be a global supply chain crisis and we haven't capitalized this business properly. So we sat down, and it was like the Sunday, I think the March 12th was the Wednesday. Sat down Sunday, we wrote a note to all of our prospective LPs saying, we think the global pandemic is gonna become real. We think major US cities are at risk of shutting down. We had 2 stores in New York, 1 in LA, head office in New York for this business. We're like, that's gonna be a disaster. And we think that global supply chains will go through a pretty bad crisis in the coming months. And some people are like, you guys are insane. New York's never going to shut down. That's crazy. But we're like, we're not going to call capital. We're not going to close. We had a $500,000 personal guarantee on closing, which we could not afford. And we bailed on the deal. And we drank a full bottle of bourbon that night, me and one of my partners, with like this shared ice jar in the middle of the table. Bad news for him was that I was not yet started displaying symptoms of COVID that I had caught in London. And then we both got COVID. And we were 2 of the first 400 recorded cases in Canada. We lost the deal. We had no backups. I had no savings other than what I had in my house. Mortgage payment due next month. Luckily, my wife is talented, way more talented and higher paid than I am. So we were going to be quasi okay. And yeah, we lost our first deal and we were like, oh shit, we had quit our jobs. Everything, COVID was real. And we realized that our whole business model, basically, as we thought was going to work, was basically dead. And we had to pick ourselves back up from there. And basically we started doing deals on a one-off basis. So we'd find companies that needed funding where we could convince founder CEOs that we would be really good partners for them. And then we like, don't worry, we'll raise the money. And they're like, do you have a history of raising money? We're like, no, but we'll put our money in a safe that will be stuck into the business if we don't raise the capital. And it was like us and our advisors, pooling together that money, and we'd put the money into the business. We'd bear all the fundraising risk, which was insane. And we were terrible at doing it. The first deal took us 5 months. By the time deal 3, which was Monos, came around, we did it in 3 days. We gave ourselves like a PhD in fundraising and family offices, and we just figured it the fuck out. And we're all hyper competitive and pretty resilient. And yeah, that was like how we got Digs done, how we got Monos done, and we built this firm which cuts typically equity checks of 10 to 50 million into companies doing 10 to 100 million of revenue.
What kinds of sectors?
All I do is consumer retail.
That's it.
And the biggest thing that we came across, and particularly when we started doing the Monos deal, we were competing against a lot of other US firms that were way better established, and we had no license to win other than convincing people that we were good guys. And so we decided, we looked at Monos, we met Victor Tam, who's our founder CEO. He had some funding from Clearco at that point to help him get through the round that we were doing. And we're like, man, this guy is an insane talent. He's got a great brand. The product is awesome. It's much better than the competitors. And he couldn't get funding from anyone. Everyone was turning him down. And because he was Canadian, the Americans wouldn't really touch him. And we're like, we just need to focus our entire business on Canada. So any consumer retail we do now is in Canada. Because of that, we have actually kind of a little bit down market. We'll do checks. We've done some checks, into like low 7 figures. We'll do those types of deals if we really like them and we think there'll be an opportunity to put more capital in. Like, have you guys heard of Formula Fig before? Anyone been a customer? We're investors in Formula Fig. Awesome business. You should go at least once a month. It's really brilliant experience. And yeah, so we'll do those types of deals as well. But yeah, we have fully focused our business on doing growth equity in Canadian consumer retail.
What did you love about Monos, specifically? Like, what metrics were you seeing? Like, I know that the founder is extraordinarily talented, all that good stuff, but what was it specifically about the business and its financials that you liked?
Yeah, I mean, we're fundamentally backers of human beings, and it really begins and ends with the founders for us. And really seeing his talent on the digital marketing side. We've made investments in companies that are not as good at digital marketing. It can be a real pain in the ass. So that talent was clear, and their path on gross margin, a lot of the businesses we probably all funded, at a time didn't need to be profitable or didn't think that mattered, and it actually really did matter. And we're lucky where we only made one investment in that environment where it didn't matter. And with Monos, we're like, let's model everything around these unit economics. Let's model containers going to 36,000 a container, which whoever thought they would have done at 24, and luckily the world's a bit more normal now. And we're like, let's model digital marketing efficiency cratering by another 50%. And the math still worked. This is still a profitable company. The unit economics in the business are amazing. And that's been our moat against all, because ton of competition.
As time has changed, and you've refined what you do, how do you think about e-coms today? What do you still find really promising about them, but also what gives you pause in the current environment?
The bar's really high, just with the macro shocks. I'm sure this has maybe impacted you guys in some way, but I think we all thought cautiously, we were probably cautiously optimistic when January 20th hit, to be there's going to be a real focus on the economy and policy is going to be geared towards making life more affordable for Americans. And that's going to mean good things. We're going to sell more suitcases, we're going to sell more dog crates, and it's been the exact opposite. So in a world of extreme macro uncertainty, and the customer behavior has just been so wild too, right? Even post-pandemic, I'd say maybe we're through the shocks of it now, but so many different categories. I mean, you guys would know this much better than I do with the businesses you fund, but if you saw what happened in the home category, right? Everybody piling into it, then it being extreme drop off. With Monos, we definitely benefited from that post-COVID travel bump. That was very, very real. The business revenue grew almost 20 times in the span of 2 years from when we first did our Series A investment. So what we love about it is how scalable it is. What we're wary of it is the category and the unit economics.
And exposure to a lot of uncertainty, both macro and then customer purchasing behavior, et cetera.
That's just it. I'd say we saw tons of e-com deals we loved in 2020, 2021, and now it's harder.
It's harder. It's higher bar.
Higher bar.
And then when you think of all these e-coms that are scaling rapidly and they show extraordinary promise, how do they manage, or how focused are you on their ability to maintain quality, maintain the user experience as they're scaling very rapidly, which is obviously you want growth, but you don't want growth at the expense of those things.
It's everything. Maintaining quality on product, maintaining quality on customer experience is just huge. What we always say is the phrase we use internally is does this create an industry-leading customer outcome? And we look across all different parts of the value chain. Like, how do they show up in service? How do they show up in product quality? What does the brand look like?
Yeah.
All those things are mission critical. If it's, something which is probably more in the discount space or luxury, we won't do it. We like kind of the price point that both Monos and Digs play in. It's a nice price point. It's affordable, but it has a luxury feel and quality to it.
Yep.
That's how we really think about it.
And then following on from that, what we do here at Clearco.
Yeah,
We've
cool.
worked with you guys and some of your investments to provide them working capital. Tell me how you think about the working capital landscape for the companies that you're investing in.
It's like non-existent, you know what I mean? Outside of you guys, really, what I love about working with all of you is just how pragmatic and flexible you were. It was like a lender that actually felt like they got it, which is not always the case.
Yeah.
Or most often not the case.
And then, so how did you, Diggs was it's one of our favorite situations. We're complex. It put our skills to best use, right? Like, we can do complicated things, but can you just walk us through that situation and what you were looking for or what you needed and what Diggs needed?
Diggs has been instrumental. I'll take you back. I'll give you the 2 minutes on it, right? We made the investment in March of 2021, obsessed with the product. Really unlike anything we had seen. And we had a thesis around there's going to be an evolution towards more premium in pet. We invested in June of 21, iOS privacy changes hit. That really screwed with our digital marketing. Our contribution margin been compressed to 3% at that time instead of 6 months making the investment, to the fault of no one. And we had to make a lot of hard pivots with that business. We took a 50% price increase on December the 1st on our hero product. We live with demand. The pricing studies would tell you that demand wasn't going to be impacted. It ultimately was through 2022. So we're like, okay, if we want to save this business, do we all believe in the thesis? We're like, yes. Okay, convertible note bridge round 1 was prove that you can make a lower price product, which they did. Convertible note 2 was prove that you can get into wholesale, which we got a 75 store test in PetSmart. Convertible note 3, which was March of 2024, was fund the wholesale rollout. So we got rolled out to 850 stores for PetSmart nationally in the US, which has gone really, really well for us. As that all happened, when we did that final convertible note funding in March of 24, we're like, okay, well, this will work because we've got convertible note. We've got this line with Ampla. So Ampla obviously went liquid. They pulled any further funding from us. They started to draw 100% of our daily cash from Shopify, really without much notice at all. We negotiated some form of payment plan, which allowed us to off-ramp them by, I think it was October the 15th. And we went out to market and we're like, okay, well, we've got to find some more equity and some more debt. Oh God, we've got a bullet payment coming up with Ampla on October the 15th. So we realized we're the only ones around the table that can solve this will be us. We had leveraged you guys for some funding to that point.
Right.
But we had the bullet with Ampla
earlier in June, correct?
Earlier in June.
Yeah.
I think to fund working capital, but yeah, it's and
I think we had partially refinanced the Ampla balance and provided you additional working capital.
Yeah, I think you guys had given us like $500,000, $750,000, something like that, right? And yeah, so I mean, huge to step in and just help us, right? And the help was mission critical at the time, and it's complex. So when we knew nothing about fundraising for our business, Venn, we didn't really know it that well when we did the Diggs investment in March of 21. We were still building the muscle, which really kind of crystallized in our Monos transaction, November of 21. We have 66 individual limited partners in our single asset SPV on Diggs for a $9 million investment. It's fucking insane behavior. We're never doing it again. Yeah. And then there's already a messy cap table. So to get all of the existing investors around the table on board with our net new financing, that wound up falling on us, me, to do that. It was a beast of a process. And it was also really difficult to figure out what type of instrument would get our existing LPs excited because, if Diggs has a flaw, it's that it's run EBITDA negative for way too long and has not made the hard decisions, which are all getting made now.
Yes.
We had to get together an instrument and it was very complicated, and you guys stepped up in a big way to help us get through that process because communicating with that many LPs and getting a deal done is just a beast. It probably took 80% of our time on, frankly, an investment that is now off strategy for us because we don't invest in the US anymore.
Right.
It's not a part of, it's not a part of what we market or do. But
you do have a Canadian founder.
We do have a Canadian founder. So that's part of the messaging a little bit. But yeah, like it's off strategy, and it's frankly like we're into Monos for like 70 million Canadian. So like if you think about just the scale of those two investments, like it's not accretive to our time, but for us, reputation's everything.
Yep.
Our team knows like I'm planning on running our firm for the next 50 years.
Yep.
I have no desire to stop doing what I'm doing. I love it. I think the ecosystem needs it. No one's thinking about private sector. Very few people are thinking about private sector job growth. The stories of the founders you meet are real. They struggle to get funding. Their counterparts in the US get funding left, right, and center. Much easier, much better terms. It's a real struggle. So we have work to do. So anyways, the whole thing is like we have a long-term view to this. So there's LPs in there that, reputation is everything for us. And not every deal will go right. And that's okay. I hate it, but it's okay. It's not really, it's not okay, but it is.
Yep.
And, but we'll be judged, I think, on the quality of work we do as well.
Yep.
So for our LPs, it's like, how do they show up? What's the work they do? What's the level of ownership they take? Those are the types of things that we really obsess about. Because shit will go sideways every single day. It does. Like the last 2 weeks have been crazy.
It's not so different. I mean, not so different from the way we approach what we do here, right? We have investors as well. And also when we face customers, we want to be transparent and reliable, and we know we're going to be judged based on that. Of course, when you invest in anything, whether it's advancing capital like MCA capital or revenue-based finance capital to customers, or what you do, making direct equity investments, like you're not going to win them all, right?
No.
You've got to be comfortable taking risk and sometimes losing on that. But it's kind of how you behave, and that goes back to the big story. It's kind of how you behave during tough times that's important.
I couldn't agree more. And that's where I hats off to all of you and what you do, because nobody else was going to help us in that situation except for you.
Yeah. It's like the complexity that we relish, and it's the complexity that we feel we're comfortable, like we feel we're expert at doing, and we're also just very comfortable doing that. And we were really confident in your team and in the Diggs team, and we thought the outcome, there was risks in the outcome, but we felt pretty good about the outcome. So it was fun for us.
It was super fun. Like the spirit of partnership was honestly unbelievable, and that's everything to us. Like, again, with that long-term orientation, we want partners that are good long-term partners. They're going to step in and get into the trenches with us and deal with the ambiguity and the uncertainty and be able to accept complexity and those challenges and just plow ahead, like always reasonable, always fair, always like great to deal with, which was you guys to a team.
So when you think about this kind of fintech landscape, because what we talk about all the time is how dizzying it can be to a founder. And the founder wants to run his business or her business. They've got a product they want to get in the hands of a customer, and they invariably need to finance it. And they're looking at, well, do I give up equity? There's this RBF space. How do I make sense of it? All of your companies are doing that. And so when you think about the revenue-based finance space or working capital space for DTC e-coms, what do you value the most? Like, what do you think is, especially in a non-zero interest rate environment, what do you value the most, and what do you prize above all else?
I'd say like the quantum and availability of capital provided, like at pace, is really everything. Because if you can do that and accept the risk and have the right like risk process around that, that's so valuable to founders, right? Because like they don't need it till they do. Or there's like a moment, you know what I mean, where they're like, okay, we've got to take a leap here. And taking equity too early is just, you just see like we always talk with founders about like the one irreversible or almost irreversible decision. It's irreversible in some ways because the history is always there as your capital walk. But your cap table is very hard to unfuck, technical term. And it's like, when you get bad people in there or you dilute yourself too early, it's like, that's where it's a mess. Like where the Monos guys have been unbelievable is they bootstrapped up to our Series A. So the Monos founders still own 50.1% of the company, which to us is awesome. Don't get me wrong, we love control in some instances, but with the Monos founders, I never had any sleep at night issues with the guys at Monos because they're insane talents. So it's like the ability for founders to not dilute themselves too early and not take on partners you can't get rid of is just, I think, mission critical, particularly in the early days, right? Like with Monos, you guys were critical too in that Series A process because saying that they had a finance team would be completely misrepresenting what that business looked like internally when we invested. Like our diligence process, we actually signed the deal up in June of 2021 and we didn't close until November because we're like, guys, we actually need to like build you a finance department and a set of financials that we can actually go and fundraise off of because like starting to blow up, right? Because what was cool about Monos is like we closed the Series A on 10 mil of rev. So it's been a good one for us. And the month that we closed, they did 10 million of revenue that month. And that was only enabled by the financing that you guys were able to provide them. Yeah. And then we were able to come in and take that out. Yeah. So it's like in those moments where you need it, like having a partner that will move quickly, meet your needs, not dilute you is huge.
And what about like, so quantum matters for sure, cost of the capital matters for sure, but what did the Diggs experience teach you or tell you about reliability and transparency with a funding counterparty?
Yeah, that's everything. And honestly, just actually on the cost of capital side, I would say like founders obsess about that a little bit too much. Like they're always like, it's expensive. Okay, what does that actually fucking mean? You know what I mean? You're like,
can't agree more.
On like $400,000, you're like haggling 12, 17. If you have a margin in your product or service that can support it, who the fuck cares? Like, correct. You're using this to take a quantum leap, get cash flow back in the business, and then use that to grow.
Completely agree.
Yeah,
completely agree.
It's insane.
You can say on an absolute basis it looks expensive, on a relative basis it looks expensive, but the question is, what are you doing with it?
That's exactly it. Like to me, I always say, I'm like, you should actually not give a shit. Not totally, but not really care about the cost of capital. You should actually care a lot more about the pace of repayment. Like your whole game is cash flow management in those early days. You know, like it's just, they've got to wrap their minds around like how to use it and what it means. So
what about the predictability and reliability of the partners?
That's just it, right? Like the partners you can go back to the well with too. Like it's just huge. Like I think you establish that relationship, cost of capital shouldn't be super relevant to you. It should be about reliability. It should be about pace to get it. And then, you know, an idea, and this will, I think, be the rub for you guys, right? Is like, how quickly do you need it back? Because there's always that risk, right? Like, you know, so there's always going to be that trade-off. And, but to me, those things are more mission critical.
What investments are you working on right now? What have you done recently that's really exciting to you? Yeah. What do you see in like the near term? We were talking about like the extraordinary macro volatility or uncertainty, especially following, you know, recent political events.
Yeah, you guys might all hate this answer, but product-based businesses, I'm like a little gun shy on right now. I'm like, let's do some formal service-based businesses.
Interesting.
And round it out a little bit. Unless, of course, you know, but the flip side is when no one's doing it is like the best time to buy, right? Like we're looking at a direct consumer brand right now. I think we're going to get it for 4 times EBITDA. Like that's insane. To me, like this market is brilliant. I'm like, the more deals we can actually do in this market, particularly we're looking at some situations where founders are looking to exit. Like they've been in it for a while, so there's a value play there. There's no market. Yep. We can come in, either partner with the founder, but we're trying to look at more majority control deals as well in the right situation. But that's really, you know, like we're looking for value buy opportunities in this market.
Yeah. What's your take on tariffs? We're talking about it a lot these days.
The Section 321 de minimis has probably been a topic for you guys over the course of last week, right? It's been messing with all of our lives, like pretty consistently. So like you look at it and you're like, okay, there's some instances I can actually understand with like Shane or Temu or something like that. I'm like, okay, if you don't want billions of dollars of packages coming in direct from China, which have, you know, value of less than $100, I'm like, for sure. I'm like, I actually get the strategic rationale. You know, you're competing with Amazon, others, but I'm like, if you've got a US-based business, you know, and they're like, have set up their entire business around de minimis, I'm like, it's just going to be a cost pass through. You're just fucking the customer over at the end of the day. And inflation I saw in the US is still 3.1%. And so they're pretty well above that kind of benchmark target of 2%. Like interest rates won't be able to move, which is going to negatively impact the economy. So I'm like, at some point, these things can be interesting on a targeted basis, but an absolute disaster if used in blunt force.
Blunt force, I like that.
Yeah. I'm like,
That's how we do it down there.
Yeah, so hardcore. Like just sitting there watching it, like this was the crazy part for Diggs. Like we went through it last week. So it's like whatever, when he started floating around de minimis, I think it was like the previous like Saturday or whatever it was. Everyone's freaking out over the weekend. We're dealing with it all week. We're like moving goods into the US, taking the hit, you know, all that. And then by Friday, it's like, just kidding. this is actually really hard to implement. It's like, fuck it, of course. That's why the whole de minimis exemption exists.
Sure.
Like, of course, that was going to be really difficult to do.
Yeah.
And then you're like, okay, well, that's now at least solved in the interim. And then I'm like sitting watching Super Bowl, like trying to have some cocktails and just chill the fuck out. And it's like, oh, guess what? Tariffs on steel and aluminum everywhere globally. And you're like, what?
Yeah. They fled the zone, I think.
Yeah, we've just, it's a very, it's a good word for it, or phrase for it. It's pretty wild.
When you think about that October timeframe where you were mid equity raise, and you had this bullet from Ampla, your prior lender, who had, they were clamping down on your capacity in the business or funding capacity from spring forward. What was it about Clearco that was different? Like, if you think about all of our peers or our competitors, what enabled the transaction to get done in your mind?
Everything. So it's a broad answer. I'll get into some specifics. I think spirit of partnership, tonality, quantum of capital, pace of capital, acceptance of risk, comfort with complexity. It was like the full spectrum of things where like we had talked to 50 different lenders in the US. I think we had realistically 3 options, maybe 6 more if we're EBITDA positive, but no one else was willing to do any of those things. And like, even some of the partners we have now, I mean, it's not easy. We'll see how it goes. You might be getting another call soon.
That's the work we love doing, and we can't do those kinds of transactions every single day because they can be time consuming.
Yeah.
But we love to be able to engage quickly in very complicated situations like that, but also do all the regular way revenue-based finance that Monos took advantage of and Diggs took advantage of earlier.
Yeah, well, I think too, for you guys, like, I'm sure, tell me if you were, but I'm sure you're thinking this way, which is like, you guys actually, I think in some ways made a bet on us too, which like we'll never forget. So yeah, there was a situation there, but now every deal we do, when we're in that type of, hopefully not that type of situation, but like we need that type of capital, you're the only call.
Yeah.
Right? I'm not making any calls. Like it's very simple. Like,
yeah, well, you guys have, we want that reputation. We want that reputation. And we talk about it all the time. Fintechs often emphasize the tech and a little bit less the fin. And so one of the goals at Clearco recently, or over the last couple of years, has just been to develop and make clear to the outside world we have this expertise. Like, we have this financial expertise. Of course, we have lots of great technology. We are tech enabled, but in situations like Diggs, like, you have to have done that stuff in the past, or you have to have experience that makes you comfortable to actually engage and figure it out and be like, I've done this before. Like, it's a tougher situation, but I see a path. And in this business and in this market where there's so much uncertainty and companies are trying to grow so rapidly, it's the predictability, we think, the predictability and reliability of the funding source that matters.
100%. I think that's so well said. And what I love too, personally, I just love this. I love that you guys are here in Toronto. It's fucking awesome to me. Like, the fact that this company exists, and listen, I know you've been through it, like, you're here for a reason, right? But like, the fact that you guys are doing this and killing it and everything, like, this is just amazing. You guys play such a critical role in the ecosystem. We got to get you back into Canada at some point. It's a separate conversation. I'm willing to do whatever it takes to be helpful. But love the mission of what you're doing and love that it's happening here. We need more businesses like you guys in Canada doing what you're doing. It's very, very cool to me. So I'm just a huge supporter. Like, whatever I can do, however I can be helpful, I'm in.
Great.
Love what you guys are doing.
Awesome.